Welcome to Realty Mogul, the online marketplace for real estate investments. Let's talk about cash flow investing. Investing can be stressful, especially when you're merely waiting and hoping for an asset to appreciate in future value and your only return is upon the sale of that asset. With cash flow investing, however, you're buying a portion or all of an asset that generates current income. Here at Realty Mogul, that asset is real estate, and the income comes from rent payments. Before investing in a new opportunity such as real estate or the stock market, it's important to know whether or not the investment is worthwhile. There are two parts to this determination when it comes to real estate. There's the cash-on-cash return, which is how much cash will be returned to investors on a regular periodic basis, and the internal rate of return, or the IRR, which is the overall return on investment that is anticipated when the investment is finally sold. Let's look at investing in a commercial building. I put $100,000 of my own money, which is considered equity, and take out a $400,000 loan, which is considered debt, for a total purchase price of $500,000. There are 4 office spaces that I rent out for $1,000 per month, meaning I generate $48,000 in annual revenue from rent. If I assume that my expenses for the year are 40% of revenue and pay interest only on my loan, my net cash flow for the year is $8,800. To get my cash-on-cash return, I divide my net cash flow by my initial investment of $100,000. Cash-on-cash return for the year is then 8.8%. In this example, year 2 and 3 are the same as year 1, except that at the end of year 3, I sell the property for $550,000. The sale costs me $22,000 in brokerage fees and similar costs, and I pay back the principal amount of my loan. This gives me a $128,000 return from the sale, plus $8,800 from normal cash flow from operating the property during that year. The internal rate of return uses the initial cash contribution of $100,000 along with the estimated future cash flows and the anticipated depreciation value upon sale to figure out the overall return that the investment might generate. Using these values and a relatively complicated mathematical function, the IRR for this commercial property is 17%. Thus, there are 2 figures that help me analyze the proposed investment. The cash-on-cash figure gives me the annual return that I can expect while the investment remains outstanding, while the IRR number shows my total overall annualized return on the investment after it's been sold. Both figures are important, but at Realty Mogul, we like the assurance of having regular cash flow during the life of the deal. Cash flow investing.